Things are pretty grim for the UK economy, not just for the near future but for the medium term. I don't think there are any quick fixes to the current economic problems which we've got, and I wouldn't be surprised to see the UK economy in recession for several years. The issue is that the government and the Bank of England's Monetary Policy Committee has not got latitude to try to get the economy going again. With inflation rising and well above the medium-term target levels laid down for the Monetary Policy Committee, which is a 2% level for the Consumer Prices Index, the Monetary Policy Committee has no latitude currently, in my view, to cut interest rates. It may consider that it can do something more when inflation starts to fall. We'll see in due course if that happens. And what about the government? Well, given the size of the government's budget deficit, the scope to reduce taxes to stimulate the economy is also very, very limited as well. And unfortunately, the prospects of the housing market are not good. Prices have already fallen by 12% since their peak in October last year. In my view, I think house prices will fall further. And of course the so-called credit crunch is exacerbating the situation because the lending institutions are first of all more nervous about who they're going to lend to, and that's not good in terms of prospects for house prices. And secondly, even if they weren't nervous, they've got less access to funds to lend. The housing market is pivotal to the well-being of the UK economy, far more so than certainly in any other European country. We know that with the credit crunch that the lenders have got less access to funds to lend for property purchase than previously. We know as well that because of the rise in arrears and in repossessions that the banks are more nervous to lend as well. Now under those circumstances there's less liquidity in the housing market and therefore the prospects for house prices, even given the falls which we've already seen in level, are not good. We're down 12% from the peak of house prices in October 2007 and I'd expect us to fall further in the coming months. And you see, the well-being of the housing market doesn't just sort of focus on the housing market itself and the well-being of the people that lend money for people to buy property. It affects the overall economy. The equity which people have in their property is something which gives people what's called a wealth effect. So if house prices go up and your property is worth more, you feel better off, even if you haven't actually got more cash in the bank. Now if house prices are going down as opposed to up, that wealth effect is being diminished. And so you're less likely then to go out and undertake other consumer expenditure, anything from basic retail expenditure to holidays, than you would if house prices were moving in the opposite direction. I think the prospects for the housing market are pretty much along the lines of what we saw in the early 1980s and certainly the 1990s, where you have 2 or 3 years of decline in price levels until we reached a point where the Bank of England is in a better position to cut interest rates than they are currently, and they won't be in a good position to cut interest rates until inflation starts to show material signs of falling.